if you're concerned about the environment, which we should be, I think we all want to be good stewards, 10x is a big deal on every query compared to the old index search that we were used to.
Welcome to the Cowles Ventures Podcast.
Well, first of all, thank you. Yeah, thanks for being here. Really excited to talk to you, get to know more about Avista and your role and all that stuff. But yeah, if you kind of just want to give a brief overview of your career thus far, how you kind of got into this role and kind of what you do day to day at your current role, that'd be a great place to start.
You bet. I probably won't go all the way back in my career, but I started at Avista in 2012, and that's relevant because I think I went there. I know I went there because of my software background. So most of my career before Avista was all about software in a couple different verticals, healthcare, e-commerce, started a company, co-founded a company over in Seattle. Even though I was here, I did the commute thing for 10 years.
Geez, how often were you bouncing back and forth? Yeah,
it was easier. You know, it was Southwest used to fly, so I was a regular on Southwest. You just kind of show up and they'd keep the gate open for you. This is pre 9/11 kind of travel. But yeah, it varied. You know, I was there probably every week for the most part. And but you know, managed my schedule to be home with the family growing up and all that sort of thing. So that was good. 10 years of that, and then I went back to another healthcare software company and helped them actually as their CEO, and we ultimately got them sold. My job after that was a connection in healthcare by chance at Avista Utilities, and I had this kind of epiphany that, first of all, it turned out I loved the energy space, and it was fascinating to have this innovative utility in my own backyard in Spokane, because I pretty much, you know, wasn't born here, but grew up and went to high school in Spokane. Lived in Seattle a bit. Went to UW, but then ended up back in Spokane for a couple software gigs, as I mentioned. And lo and behold, we have this innovative utility called Avista that kind of fell in love with.
Yeah, I mean, because most people know it, if you're in Spokane, as like the people that, you know, you get your energy bills from, and Avista's got the energy and all that. But I mean, they have a pretty broad grasp throughout like the whole county, whole city. Like, what all is Avista? I mean, maybe not all, but what are some maybe things that people wouldn't think of that they have a hand in or they're involved with, more than just utilities and providing people with power and water?
Yeah, you bet. Well, the utility itself, of course, is about 99% of what they do, and that's, you know, safe and reliable and affordable energy, both gas and electric service. And the majority of the customer base is right here in the Northwest. It includes Spokane, Coeur d'Alene, of course, and then all the way up to Bonners Ferry for for gas. Sandpoint, we do have electricity there as well. And then you kind of go west. The service territory, of course, Avista, if you don't know, is older than the state. So it was incorporated before Washington was actually a state. So our birthdays are in the hundreds now. I think we're 135 plus now years old. So the service area is actually used to be a little bit bigger than it is now. But you go west over towards Ritzville. We've got a wind farm in Lind, and then you go south down, and the Idaho side, you go south down to Grangeville, and then you go southeast down to Pullman and Moscow. What most people don't know is some of our largest hydro is in northern Idaho and western Montana on the Clark Fork before that river comes into the Pend Oreille. So those are the crown jewels that were built in the 50s, which is pertinent because we have this load growth topic now in the energy space around data centers. Back then, those two dams, those projects were built in advance of load growth because of appliances and air conditioning in the region. So that's kind of cool in the 50s-ish. I'm not a perfect historian, so I'll just give you generalities, but those still are, are crown jewels, like I said, in terms of hydro. Things you may not know about just outside of Avista, we did acquire, after I started in 2012, and we did acquire a small utility in Juneau, Alaska. So we operate that as a subsidiary called Alaska Electric Light and Power. So technically we're in 5 states, because if you count Montana, even though we don't have a lot of retail customers in Montana. It's mostly about the dam there. We're technically regulated by 5 states.
That is interesting. But then your role more on the development, investing, strategic side of things, which people probably also don't know that Avista has kind of that arm of the business.
Similarly to AEL&P, we also have a wholly owned subsidiary that's called Avista Development. And Avista Development in its history has done a few different things around trying to help the economy in our service territory, hence the development. So more recently, my role in the last 10 years plus has been to help shape our strategic investments under that same Avista Development. Although we still do economic development activities, the university district's a great example. Some of my predecessors helped get that moving along with some of our partners like McKinstry. And that activity still happens under that roof. But Avista Development, most of our day job, our small team, myself along with Doug Forkner, and we're in the finance group at Avista, so we have financial support. Not necessarily full-time folks, but a lot of great folks that are doing utility finance are helping us out on the non-regulated side as well. So, but a small team. And non-regulated means that, we're doing work that's outside of the utility regulation, which means this is a good thing. We don't spend customer dollars. So the money that we collect from our customers for service, we don't get to spend that. We don't get to use what we call rate case dollars or customer dollars on this activity. So everything is financed by our shareholder. As an investor-owned utility, we have shareholders. I won't get into utility accounting and how all that works, but we are a wholly owned subsidiary, but non-regulated.
Gotcha. And then for kind of your position in the Avista developments, like what kind of projects would you guys be looking at, are interested in? Are you guys trying to kind of figure out kind of what's out there? Or are you guys trying to, poking around, trying to figure out, okay, looking 10, 15, 50 years down the future, what could work for the area?
Yeah, and so I would say 90% of what we're doing in the last 10 years or so is kind of honing in our investment thesis, our strategic investments. Another word for it might be corporate venture capital, where we are investing in companies either directly, and we'll get into that a little bit more when we do a direct investment or an indirect, but we'll also have a position in other funds that are strategically investing in the energy and utility space as limited partners. So we do both.
Okay.
And the goal is strategic first. What does that mean? Strategic, fancy corporate word. Well, it's basically we're just living vicariously through our investments, through our companies, our portfolio, like you have a portfolio at Cowles Ventures. We're learning through those CEOs and those employees at those startups at the board level for the most part. And there's some research involved as well, but mostly at the board level, we're watching these startups, how they're navigating, sometimes trying to disrupt the utility space. And we can learn from that and see what's working, what isn't, what we might bring learnings back to the utility in terms of technology or these disruptions that kind of help us define what the utility of the future is. And that's, you mentioned the time frame. It's typically 10 years out, but sometimes we'll have an investment that has an immediate impact to our business.
For the people that might not know, corporate venture capital versus normal venture capital, could you kind of differentiate between those two? Yeah,
and it's good. It's a good topic because corporate venture is actually kind of making I don't know if a comeback, but it's really surging right now in various industries. So you see corporate venture, of course, the most famous, I just go back to Intel Capital. I think they're probably, I don't know if they're the first corporate venture capital, but they're the most famous. And in their case, they're like us. They do it on balance sheet, meaning they're internal to the company. You can have corporate venture, we say, is off balance sheet, that they're investing on behalf of the company, but they have other people that bring in money that they're investing as well. So we'll park that. That's a little bit less common. So the on balance corporate venture is basically typically strategic value, like we're trying to get, but you can have corporate venture for financial gains only, and they're just trying to help the business in terms of financial performance through these investments. So I would say if you look at the statistics, it's typically going to be more strategic first, and financial returns are still going to be important to all these programs.
Yeah.
But it just depends on the company. And then as far as what a founder or a startup might look at when they see a venture capitalist giving them money versus a corporate venture capitalist giving them money, is the venture capitalist is going to have probably a lot more time in terms of board participation and a lot more time in terms of guidance and running the company and all the connections that they have over the years. A good venture capitalist can have a lot of connections in areas of recruiting and areas of HR and all the things that can help a founder be better and maybe not spend as much time and money making mistakes, because you can learn from that board member, that venture capitalist. I think the corporate venture board member is going to be a little bit different in that they may not have those kind of connections, although they can in some cases. It's going to be more about what's the industry do today, you know, or how can I make introductions into this vertical, in our case, energy and utilities, and help you, you know, connect and maybe not make mistakes in, you know, I would say this 10 years ago, this has changed, but I'll give you an example, maybe 10 years ago. Don't set up a software company for a utility industry that is a SaaS model when they won't buy it. They need to buy it as a perpetual license. Because we in the utility industry like capital, because that's how we get investment into the company. If you're an investor-owned utility, is through capital. So these little sort of nuances that a startup might not know how utility operates, in that case, utility accounting, that's changing. So don't use that as an example, but we do buy SaaS software now. But that's an example where, you know, a strategic investor or corporate venture can help that startup really understand the industry nuance that they would maybe take 10 or 15 years to find otherwise if they were just on their own.
Yeah, I mean, you kind of touched on that a little bit, but I think boards and advisory boards or formal boards, it's always kind of a topic of conversation, especially with early stage founders or first time founders or whatever. Yeah. In your opinion, I mean, what makes a good board? Why do you want good board members? Like, why is that even applicable to startup founders when they're forming their companies? Yeah,
well, I think we started the topic already with just the, you know, the different types of board members. Kind of, you know, kind of like a sports team. I use sports as an analogy, but you don't want all the same talent on your team, but you don't want all the same talent on your board either. So it's kind of an extension of your team. It's not a full-time team typically, although some chairmen can get pretty heavily involved in a company, good and bad. But yeah, so I think you want to mix of skills. So you want some industry knowledge, some deep vertical knowledge in your industry is helpful. And that can come in, it can be independent of the type of board member. You know, if you have an independent board member, they can bring, say, CFO knowledge or finance knowledge. That corporate board member can bring industry knowledge. The venture capitalist, maybe your lead investor, maybe they can bring, you know, that kind of knowledge around how to raise money in your next round and really, you know, cut to the chase on when you need to raise money and how much you should take on and at what price and those kind of things. And they can help. So I really think you need a mix. And then we start talking about an advisory board, and those can be effective if they're, you know, small and maybe more focused on a particular problem statement or a topic. If, you know, I think an advisory board, you can kind of get in a room and if you don't really have a goal or an outcome in mind, it can be less useful. But I think they become more important as you're trying to learn on new problem statements as your company grows. I think maybe early stage advisory boards probably should be more, those advisors should be more independent board members, right, sitting with the rest of the board. For me, that's just my opinion.
Yeah, no, I bring that up because I was just at a conference in Wyoming, and there was a whole panel on, okay, you know, how to form boards, what different boards do you want? And one guy had a very interesting thought, or how he practiced it when he founded his company, was started the advisory board very, very early on with like, hey, I'll give you, you know, 1,000, you know, kind of rudimentary shares of whatever, but like we're gonna have a schedule. So kind of making it like a pseudo board before the actual, formalization was in place. But yeah, I think, especially for solo founders or first time founders, like very important to have kind of that, sounding boards. You'd be like, hey, this is kind of what I'm thinking. Like, what do you think? And often usually they're independent of, not family friends, but like people that you respect in different industries or whatnot.
Certainly helpful if you haven't raised money, if you're bootstrapping and you're super early. And, bootstrapping is a good thing if you can make progress at the same speed or faster than you otherwise would with venture. So no problem with that. But yeah, in that case, that's a great example where you don't really have a formal board, or maybe your board is just the founders and one other or something like that. And you really need that expertise in other areas. And so that's a good use for the advisory board.
Yeah. And I'm sure you have a good perspective on this. I mean, when should companies, stick with the bootstrap route? If it's making money, continue on that. When should they investigate or look into, hey, maybe we should raise outside money through venture capital, corporate VC? I mean, what are kind of pros and cons of each? Why should one company go here while the other one goes here? And kind of what does that look like?
Yeah, it's a matrix. These are tough decisions. It's a good question. It's going to depend on, do you think you can go to market as fast as possible to extract the most opportunity or the most customers or the most revenue from your value proposition with or without external money? I mean, if you can go faster with bootstrapping and you can handle the pain that can come with bootstrapping, and capture as much value, and you're not going to risk losing to other competition or other solutions that may already exist, then I think bootstrapping can be really good. But if there's a timing issue, or it's kind of now or never, or you want to make sure you create a moat, then venture can get you there faster, and makes a lot of sense and can actually reduce some of the pain, because you can bring in employees to help that you wouldn't otherwise be able to afford. What the J curve is. It's all about how deep that J curve is in terms of spending money to get to the profitability part of the curve. And I think you have to think about both of those. Like, when do I need to get there, and how do I get there to prove this is a viable company and a long-term opportunity for whether it's the company or if it's the future. Somebody's going to buy this company perhaps, but still they have to see the viability over the long term. So can that capital help you get there in a better or faster way? I think that's a decision, again, for the board and the founders and the company.
Agreed. I
don't think there's a wrong or right answer there.
Yeah. I know it's always funny when people, meet people at conferences, or when they're like, oh, like, what do you do? And I tell them or whatever, and they're like, oh, I don't know. I've always, considered that, if, especially if they have their own company. But a lot of people, I guess, don't specifically know, like why you would do one over the other. It's always a kind of a point of conversation. But
the other answer is there's sometimes the J curve is pretty flat. Like, it could just be you're opening a lifestyle type business, and you're pretty much gonna, spend the money that you make, and you're going to be profitable day one or close to it. And there's I have lots of friends that have sort of lifestyle businesses that are going to make a lot more money than I ever have. So, there's nothing wrong with that either. And that's just, that's just not a business model that doesn't have a big J curve bottom, right? That curve is almost non-existent. So there's no reason to add venture capital to that.
Yeah, sure. When you guys are looking at specific companies, what qualities, I guess, are you looking for in these companies, or what specific problems do you guys have that you're trying to solve?
By the way, I don't think your grandpa probably raised venture money.
He definitely did not
in his career.
No, and he did pretty good.
Yeah, that's a good example.
Yeah,
Wayne. I'm talking about Wayne Gibson, folks, if you know him.
Yeah. But yeah, what types of problems are you guys trying to solve when you're looking for companies? Is it, obviously mainly in the utilities energy space? What does that kind of?
Yeah, I think when we were immature about it, it was a little bit random. It was more, oh, this is interesting, and so we'd pursue it, a kind of a shiny object approach. which, is sometimes, serendipity tends to work, so you can find some good stuff that way. But we've created more of a thesis, and we look at that thesis every year and we adjust. So right now I can tell you what our thesis is, and at Avista, it's when I say it, it'll be pretty obvious. Wildfires, top of our list. Wildfire risk. Affordability is a challenge for our customer base, and so that's going to be a little harder to invest. We haven't made an investment there, but that's, we want to continue to be an innovative utility and be a clean, responsible utility moving forward. But if things are out of hand in terms of inflation and it's supply chain, as we've seen, coming out of COVID, the energy burden starts to grow. We have to make sure we're paying attention to that as well. Even though we still have relatively low rates in the Northwest because of our great hydro system, we're getting those pressures because of the things I just mentioned. We're still good compared to sort of the Northeast or Europe, certainly in terms of rates, but it's all relative, and the pressures are real. So affordability is on the list, and then I would say grid tech, clean tech in general is going to be a thesis probably for all utilities that do this kind of work. Can we get more out of the grid through technology, and that could be hardware, that can be IoT, that can be AI now is in the mix, of course. So I would throw all of that into kind of a grid tech play. So those are our three themes.
Nice. And I think obviously you kind of just touched on it, but AI is obviously a huge topic of conversation, big buzzword in the media and in the news and everything. Everyone's very worried about data centers and energy and how that all is playing. I mean, from your perspective, what does that look like now? What does that look like 5 years from now? I mean, how is this going to kind of impact everything that goes on as AI kind of ramps up to what it probably is just going to keep going for forever?
Yeah, it's fun. I mean, it's a great opportunity. It's a great time to be in the space because the ironic thing is AI is driving a discussion around massive load growth in the world, certainly in the U.S., North America. So that's a good problem for utilities. Is if we the best thing for utilities is spread our costs across more meters than we have today, and that's just general growth. If more people move to our region, then we take those same costs and we can spread them out over more meters, right? And it helps with that affordability. Load growth has a similar equation, not quite the same as adding a meter, but it certainly can help with our base costs and our general costs to spread that across a larger load base. So it's a good thing. And then, of course, how can we apply AI, which is causing this demand and power, to our own industry from a productivity standpoint, from all the themes we're talking about, wildfire included. And so, we get to think about it on the load growth side, and then we get to think about it on the application side for our own industry. And so when we're investing, that's certainly part of the equation now. We're not looking for specific AI companies per se, but how do we apply it? And it's tough too. I'm sure more than just our industry is looking at this and saying, okay, well, if I just, if I had a nickel for every sort of point AI solution there is right now to go solve a certain problem.
Right.
So does that mean I've got, as a utility, I'm speaking for the utility, does that mean I'm going to end up buying, 50 solutions for each point use case?
Yeah.
Or am I going to purchase a platform, or even more so, go to a platform like an Amazon or a Google, right, and build these use cases against a single platform? And the risk of that is if you're waiting for the perfect platform, which isn't there yet, you might not do any of these use cases that we're talking about. So we're kind of you don't want to get stuck waiting for the future when it's, you really can learn through experimentation, innovation. So we're having a little bit of that challenge. We do have an AI working group that I help with at the utility that is, meeting on a regular basis and doing experiments and seeing how this technology can affect the utility industry. But I do think there's a bit of a bubble. I mean, I personally, this is maybe a little bit more Mark G speaking than the utility, but I do think, the supply side is maybe maybe there won't be as much a bubble because we can't grow it as fast enough as the industry would like because we don't have the power immediately available. So maybe that'll actually calm what I think is an overbuild on the supply side and a little bit less clear on who's going to use all this AI power on the demand side. And this is a bad analogy, but I was around when we built all of this fiber, to help enable the .com and the internet revolution. And of course, all that fiber became dark, and there was a recession around it, and we overbuilt. But now all that fiber is being used. So eventually, we caught up on the demand side. Bad analogy because this is software and less about hardware, although fiber is a big part of what we're doing today. But I do think on the supply side, there's certainly if everybody got what they wanted in terms of data centers, I can't imagine the demand required. In fact, there's some good studies on the demand that's required. When you start thinking about, and I do have a master's in data science, so I can speak to this a little bit. When you think about agents using as a customer of AI, of their own AI, instead of just the population of the world being sort of the limit of the demand,
right.
Now it's the number of agents that you've created that are using AI. So all of a sudden that becomes infinite.
Yeah.
So then you can imagine a world where the demand is going to meet the supply that we're trying to build. So
that's a good point. Yeah,
I think the short-term bubble is a concern. Long-term, I'm pretty bullish.
Okay, that's good to know, because I feel like, what would be a good example to kind of put it in like simple terms? Because I feel like when people bring this up, they're like, oh, the data centers, we just don't have enough energy, like blah, blah, blah. But for normal people, they're using ChatGPT on their phones, they're using, it on their computers or Claude or whatever. For the average person, probably doesn't seem like they're using that much more energy than they would be normally. Like you kind of brought up a good example for the agents and that, but for what the demand and the kind of narrative is that's like, oh, we're going to run out of energy and there's not going to be enough of this, that, or whatever thing. How do you kind of quantify that?
Well, you got to think about the training side, right? And that's just massive. NVIDIA is leading that way, of course. And it's a supply side when you've got the demand on for chips alone is you've got NVIDIA leading the way, and they're they can't sell enough of these things. But then you've got all the hyperscalers that are trying to build their own chips, right? So you've got Amazon trying to build chips, Apple's building chips. So when you got the software companies building the hardware, not to mention the data centers, but building the hardware as well, there's something here. And that nobody's caught up to NVIDIA yet, but they're getting there, Google as well. But kind of back to your question, I think that consumer use cases are they're cool, and I'm a consumer of it. It's it's still a bit of a novelty, although these models are getting so much better now that they're I would say they're kind of like in the workplace. AI is like an intern, right? The productivity of, hey, I've got a free intern. Well, it's not free, but I've got an intern now that I can turn to anytime that I need it, right? Without having a real intern. I'm still human in the loop, still making the decisions, still having to audit like you would with an intern.
Right.
You're not going to turn your intern's work into the board.
Right. Yeah. That's a good way to put it. Yeah.
So, but back to your question though, the just for the consumer side, the power that's required for a Google search traditionally compared to a ChatGPT query is like 10x.
Oh, really?
Just on that.
Wow.
On the inference side, like that model's already been built, not to mention the power consumed by creating all these new models.
Wow.
So yeah, if you're concerned about the environment, which we should be, I think we all want to be good stewards, 10x is a big deal on every query compared to the old, index search that we were used to.
I think you kind of see more people using AI chat features as kind of that search engine now.
I'm doing it.
People,
Yeah. So when you think about 10x the power just for that, that's a real burden.
Yeah.
Yeah.
Where do you think? Obviously they're building data centers kind of as much and as fast as they can. Are you think we're going to see? They've talked about putting them in space and underwater, and they're kind of doing all sorts of interesting and crazy ideas. Where do you think that's all going to land? That's more of a hypothetical, I suppose.
Yeah, it's not. It's real. I mean, Avista Development is in a fund called the Energy Impact Partners Frontier Fund, and I kid you not, I saw a pitch, and I won't give the company name away. They're sort of in stealth mode, but and this frontier is a hard tech, deep tech. It's a little bit longer term kind of returns. Instead of maybe 10 years, it's more like 20 years. So this is really, so they've invested in fusion, for example, not just fission projects. So not just small nuclear reactors, but actual fusion technology. And there's a few of those. Like Seattle is kind of a home to a lot of fusion plays. But I saw a pitch. And I think they're going to get funded. I don't know that our fund that we're in is going to be one of them, but the pitch, I kid you not, was the first distribution grid using photons in space. So the first electric utility in space, because the satellites in space and future data centers in space don't have enough power kind of out of the box when you start thinking about doing computation for large language models, et cetera, for data science, for AI in space. We're going to have to figure out how to get more power to each satellite instead of just having them right now. They're self-sufficient. So it's real.
Yeah, that's great.
Crazy.
That was a good analogy for the 10X, because I feel like for the majority of people, they don't know. They know that it's taking up more power and it's using somehow, but they have no idea. And is that, for power usage, is that more on the consumer side, or kind of like you said, more on the training the models and on the commercial side that these big businesses are
it's the NVIDIA chip is just so it turns out, NVIDIA was a gaming chip when I was your age, and, they were interesting, but they were doing, just graphics acceleration. Well, it turns out that statistics helps AI and that sort of focus versus a CPU, a GPU, graphical processing unit, is really good at stats, and that's what AI is a bunch of probabilities and the pure math is still better on a CPU, but that just as they've tuned those GPUs in case of NVIDIA to get them to perform and go faster, they just need massive amounts more power. So it's just an evolution of those chips performing better and better, and then when you start making these models bigger and bigger with more data, the power just goes crazy. I mean, the requests for power at Avista, I won't give you the specifics, but it's unparalleled. At one point, we've had more power requests in our queue, and some of it's speculatory, some of it's first-time data. Everyone, it's a bit of a gold rush. But it's larger than our entire load is today. Yeah. Obviously, we can't serve that overnight.
Right.
But we have dedicated folks that are working on this problem at Avista, and so multiply that across all the utilities, at least in the U.S. You think about the demand, and then do that throughout the world, and you realize it's this 10x is adding up.
Yeah, that's why they got you guys to go find the next golden company that's going to solve everything. For founders that are kind of in that realm, what would your advice be on, pitching traditional VCs in that route versus kind of finding you guys and going the more strategic route? I mean, do you kind of have to place yourself in more of a, hey, here's who we are, this is why we're raising money, and this is why we would be good fit as kind of more of a partnership than the traditional VC, or kind of how do you guys usually enter into that relationship with companies?
Yeah, I think companies, I'll put myself in sort of the founder's shoes. And in fact, in AI, I'm seeing, and I don't see every deal, of course, but, relative to the energy space, I see a few AI deals. And those founders are typically not interested in strategics because they can get venture dollars without a strategic bent. And they can be, if they're really good, they're going to be oversubscribed right now, as there's a lot going on in this space. And so they don't necessarily want the strategic dollars because they don't want to get tied in to a given strategic investor and what that strategic investor wants out of it. They want to have the freedom to do whatever they want. And so they'll actually make a conscious decision not to bring in a strategic on a given raise, especially maybe even early on. And or they don't want to get tied up with having to, give that strategic a first right of refusal on acquisition.
Yeah.
They may want to play the field a little bit longer. So those are some of the things that goes into a founder's head. AI especially. I think in general though, strategic investors aren't going to be the lead investor, and so it's going to be a mix. It's going to be your traditional venture. Let's say it's a Series A. They're going to lead the round, and it might be nice to have one or two strategics come into that round in the syndicate, so that you have, again, back to that board mix, you have that access to just different experience and different views.
What are you seeing in terms of, mistakes or things that first-time founders should be doing that you guys kind of help them, lead them along? Like, what are some common ones that you guys are seeing, especially in the utilities and the energy space?
Yeah, and that's a great question, because this is one where a strategic investor can help if you don't have that guidance or you don't have that advisory person if you don't have an investor, but maybe could have it as an advisory board role or advisory committee role. I think a good example there is just not in our industry, not understanding how slow decisions can be.
Yeah.
And maybe sort of taking that sales cycle and planning for a different sales cycle than the reality. You may have a great solution and the value proposition can be there, but the utilities have seen so many changes over years that they really are conservative. And then there's all kinds of things that can get in the way, like regulatory challenges, where the utility can't move fast enough because they got to have regulatory approval for a given. And I won't give you specifics, but obviously safety. The utilities are less inclined to try something new in terms of if there's going to be a safety or reliability risk. It just can become a non-starter. So I think really understanding the process that selling in our space can be painfully slow. The flip side of that is once you have, let's say you've gone through a pilot and there's some acceptance, we tend to tell our neighbors, because we're not competitive because of the way utilities are set up, monopolistic for a service territory, whether it's a investor-owned utility or a public type utility like a co-op. We tend to tell our friends and we lean on each other, and it's a good community, so references become really strong. And so you become really sticky. All of a sudden you can become a de facto standard, or not have as much you can keep competition out once you've kind of gotten over the hump. But that sales cycle to get over that hump can be, you can run out of money before it happens.
Yeah. As you're kind of looking at what's now, what's ahead, I mean, what's something you're excited for into the future, say in the next 10 years? What do you think is going to be something you guys are looking into right now?
Yeah, I think just, I think we can get more out of the grid with technology, back to the grid tech, clean technologies. Last year was a tough year with 2025, with some of the changes that happened from a funding and from a subsidy standpoint at the federal government level. And, we'll leave it at that, and some of the tax breaks that went away for certain technologies. Part of that for me, though, as a venture capitalist, like, it kind of removes the noise. I think there was a movement there for a minute where, if the Department of Energy is backing this technology through a grant, it must be good. It turns out that's bad due diligence, right? I mean, that they're making decisions based on interest in technology, not based on whether this can scale or whether the unit economics and the value proposition are going to be good for commercial utilities. So I think the clean tech 2.0 community kind of made that mistake again. So now that some of that noise is gone, we know that technologies are really good, that are going to make it. If they didn't get here because of subsidies or because of massive grants, we actually can lean in on that and say, this thing got here on its own. Let's go. Let's put gas on this fire. And so, I mean, I think that's a trend right now. But anything that we can do, you know, the country in 2025 and 2024 built very little transmission. So it's really difficult to expand the grid at that level, at the transmission level, which is, you know, the stuff that the wires that are taking generation, whether it's renewables or gas or nuclear. If we're going to move that power around, we need new transmission to help with this data center and this load growth. And that includes industrialization. It doesn't have to be a data center. If we're going to do more reindustrialization in the US, we're going to need more power for that as well. And you're not going to get a lot more power out of the system without net new transmission. So is there other technologies that we can apply to get more out of the system that we have today, make it more efficient? Can AI help us with safely optimizing the systems that we have today? We're talking about virtual power plants and things like that. So it's not just about net new, building new, it's what technology can we apply. Can we cool our lines a little bit more in the summer with tech to get more power out of them? And that's a simple example, but there's some cool technologies that are happening there. So it's a mix of, you know, how do we apply software to the hardware and new hardware in terms of IoT and making better decisions, better visibility out on the grid for those that are operating it so we can get more out of it for this load growth.
Love it. And then last question here. If there's one thing, you know, you want viewers to take away, or, you know, prospective companies to take away from how to work with utilities, what to know about utilities, you know, what best thing could they come to you with to help you guys out?
Yeah, I think it's not, that's a great question. Good finale for us here, because it's kind of, this is true in other industries too. It isn't just about utilities, but especially for energy. It isn't about the solution. It may be a really cool solution. It may excite engineers to talk about it, but, you know, I go back to a value proposition. For me, the definition of a value proposition is your solution compared to the alternatives. And so why do I want to switch when I have these various alternatives, which could be do nothing? That's a viable alternative, is status quo, right? So I really want founders in our space to come. We can get into the tech and we can dive into it, and the technology readiness level is going to be important to utilities. We like things higher than lower, of course. But I think founders that are technical, and especially engineers, really need to think in terms of business value first, and why, and put themselves into the shoes of the utility frontline, utility managers that are trying to get power out the door safe and reliably. How are you going to make that person's day better with your solution? That's what a value proposition is. It has nothing to do with the engineering. And so, you know, putting yourself into that mindset, and I think you can apply that to other industries, of course.
Yeah.
Then it's like, you're going to make my day better because of this. I'm interested in your solution over status quo or somebody else's solution that makes my day worse. And really, that's kind of fundamental to business.
Yeah, I love it. Well, Mark, thank you so much for coming on and enlightening us about utilities and all things that you guys are doing at Avista.
Yeah, thanks for having me.
Awesome. Thanks.